Hey, how's it going? Sonny Chris here, your lender in sneakers. It has been a minute since I've done a What's the Cost Wednesdays. It is May 13th, 2020. We're approaching about almost 2 months into quarantine. Hope you guys are staying healthy and safe. But let's just hop right into it. We've got a very special edition for this particular episode of What's the Cost Wednesday. This is going to be a nod to our veterans out there. So, for our veterans out there in our current active military, Navy, Marines, Army, Air Force, thank you so much for your service. And also the Coast Guard as well. Thank you guys so much for making the sacrifice. Coming from a military family myself, my dad served 20 years in the Navy. I know the sacrifice, at least from the family's aspect, or the family's point of view, has made. So thank you guys so much. And with that being said, what we're going to get into in this particular What's the Cost Wednesdays is the VA home loan benefit. And I want to emphasize benefit. I think this is a great tool for our veterans, especially if you are, you know that you're stationed for a while in a location. You have a good amount of time where you can build some equity while using your BAH and also your VA home loan benefits. So don't want to take up too much of your time here, but let's just hop right into it. As far as the interest rates go, what we're going to use is this bankrate.com survey rate. What they have the rate for the VA loan as projected right now. Obviously, this is just an estimate. I'm not saying that this is going to be the best resource, but we're just going to use it as a benchmark and an example. For a 30-year fixed rate mortgage, they're reporting an interest rate at 3.57. We're going to buffer that just to be safe here as far as the information I'm sharing with you today, just for educational purposes. We're going to use 3.75. Once again, hop right into Redfin, and we're going into National City. So shout out to all my National City folk, Filipino City, Seafood City, Jollibee City. I'm totally just kidding, man. Got love for National City. Growing up in Mira Mesa, and especially my family being Filipino, we had family down in National City, so we spent a lot of time down there. But yeah, the particular property we're getting into is 2038-40 La Siesta Way. And it's new. So shout out to whoever's listing this is. 12 hours ago, just hit the market. Let's look at the pictures here. All right, so it looks like it's been remodeled. They got the new vinyl flooring that's really popular nowadays. Kitchen's looking okay. Looks pretty small, but loving looks like the gas stove right there. New appliances. Oh, look at that bathroom right there. I can work with that. I'm loving, you know what, like I am definitely a fan of bathrooms that have this little cutout right there. I would definitely like that in my future home. Looks decent, good, nice little backyard, new fence. Don't know what the neighborhood looks like. I'm not too familiar. It looks like there used to be a pool there, so you do have an option of making a pool maybe. I don't know. So looks pretty decent, but you know the price is listed at $649, 4-bedroom, 2-bath. 1,628 square feet, literally on the market just 12 hours ago. So let's hop right into the VA loan benefit and show you the breakdown of the expected cash to close and what the monthly payment potentially could look like for you. So looking at the total cost analysis here, once again, this is a report that I prepare for all my clients just so that you know exactly what you're getting yourself into. And I think it's always better to be over-prepared than under-prepared, especially when you get into the biggest transaction of your life. So what's the cost Wednesday? 513 VA loan, 2038-40 La Siesta Way, National City. We're going to look at two particular examples of the VA loan, one with the funding fee and one with no funding fee. If you want to know how you can get rid of the funding fee, really it's about if you have disability or not, or if you claim disability, and it's recorded on your VA loan benefit. Usually it shows up in your COE if you're exempt or not. So the VA 30-year with the funding fee, what you're looking at here is a loan amount of $663, interest rate at 3.75, monthly payment at $3,880, total cash to close is $19,470. I know this is probably one of the bigger topics here for our VA home buyers, is that they know that they have 100% financing, that they don't need to come up with a down payment. And sometimes they come up with the mistake of they don't have to have cash on hand to close. What they forget about is the closing costs. So there are closing costs even if you have the VA home loan benefit. If you want a good measure or a good standard to kind of set your expectations correctly, I would use 3% of the purchase price, or that's what I personally use. But obviously, if you get a really good realtor. I know a couple good realtors myself that can help you negotiate the closing costs or some type of seller credit. I definitely would lean on their expertise as they have a better gauge of what's going on in the market and what their feedback is from the seller. So they're more in the front lines of that, and they can gauge that on the specific property that you want, because obviously each property would differ depending on the seller. So VA 30-year, no funding fee, loan amount at 649, 100% financing, 3.75 interest rate, payments at 3811, cash flows at 19,470. As you can see here, the difference in the funding fee is about $69. So monthly payment difference here. And one last thing I want to show everyone here on this particular What's the Cost Wednesday is your net worth in 7 years. So as you can see here, I used a very conservative figure of 2.5% year over year appreciation rate. That's very conservative for California. In 7 years, if you're stationed long enough here in San Diego, this is how much equity you can build up in this particular property. Assuming that, the appreciation stays consistent 2.5% year over year for 7 years. Now, with that being said, I know that living in San Diego, we have higher prices. Well, this is the bigger picture here, is that right now you don't need to buy, especially if you can't afford it and you have limited resources, you don't need to buy the forever home. You can have a starter home, build equity in 7 years, refinance and take the cash out with that equity so that you can lower the payment and also cash flow and maybe convert this into an investment property. And now you have that extra cash on the side to buy the forever home. And that's the bigger picture. That's the bigger game. A lot of people, I think, even including myself, wanting to get into the real estate market, want to buy the forever home, the home that we grew up in with our family. Well, you kind of just got to work with what the cards have been dealt with, especially here in San Diego, where you have the sunshine tax, which I believe it's worth it. But yeah, so I mean, that's amazing as far as how much equity that you can build up in 7 years here in San Diego. But yeah, so essentially that's the VA loan on this particular property. That's your estimated monthly payment, your estimated cash to close. Interest rates change every single day. If you're looking to buy, it's still a good time to buy. The market is still pretty strong. All I have to say is that if you have consistent income, and it was a goal for you to buy this year, you might want to see if you can get pre-approved. So thank you guys so much for your time. Hope you enjoyed this information, and thank you for tuning in for another episode of What's the Cost Wednesday. Take care.